Cryptocurrency. It's revolutionizing the future. This is giving humans freedom, the ability to trade currency across countries, globally, quickly, efficiently, and untraceably. Let's talk about what cryptocurrency is, why the government and the world is talking about it in such craze, and I want you guys to understand it. So, what is cryptocurrency? So, an overview of digital currencies and their role in the financial landscape today. So, cryptocurrency is a digital currency that's going to be tradable. It's a digital asset that utilizes what's called the blockchain. So, bank accounts, they do everything via account numbers, routing numbers, etc. Cryptocurrency does all the transfers via the blockchain. Blockchain is going to be like the back-end database system in which all funds and hashes, which are pretty much transaction ID codes, are all transferred throughout. Okay. So it utilizes the blockchain technology to enable secure, decentralized transactions. So it makes sure that the transactions are globally able to be sent. It doesn't matter country, it doesn't matter time. Okay. That's what's really, really cool about crypto. You can just send it wherever, as long as somebody has a wallet and as long as you have a wallet, you can trade some crypto. And its growing popularity is reshaping how we view money and finance all around the world. So as you guys know, we have physical cash. Okay. So we have physical cash. Okay. Then you guys have banks. Okay. You have your bank money, of course. And then you guys are going to have crypto. Okay. These are going to be the three forms of currency today. Cash, we got your bank account money, and then we're going to have cryptocurrency. Okay. Cryptocurrency, it's also going to fluctuate too. Okay. So depending on what crypto you're in, say if you guys are on Bitcoin, BTC, or Ethereum, you guys might see your money fluctuate up and down sometimes. Okay, so just make sure you're buying at key areas of support. StackMODE.net if you don't understand trading, and I'll teach you when to buy Bitcoin, Ethereum, etc. Inshallah, and how to identify good opportunities and when to get in. And then, you'll be able to go ahead and make some profits versus when you get in versus getting in at the very tops and then just catching a dump and losing money. So if you want to avoid losing money, StackMODE.net. So let's talk about how cryptocurrency works. Okay. Cryptocurrency utilizes the blockchain technology once again. Okay. It's a decentralized data ledger. Okay. That records transactions securely and transparently across multiple nodes. Okay. So understand that decentralized, okay, the meaning of decentralized is pretty much where control and decision making are distributed among multiple participants rather than being concentrated in a single authority. Okay. So transactions are verified and recorded on the blockchain. That's kind of like the confirmation, quote unquote, bank account system it works through. Okay. Is the blockchain and that involves a network of nodes and computers rather than just relying on a single central authority. Okay. So in a decentralized system, no single entity has control over the network, and it makes it more resilient and resistant to censorship. For example, the Bitcoin network is decentralized because it is run by a large network of nodes. And even if the majority of network nodes were to go offline, the network will continue to function as designed. Decentralized is also a key feature of decentralized exchanges. That's also what's going to be called DEX. You guys might have heard of DEX before. Okay, so if you ever heard of DEX or DEXs, it's going to stand for decentralized exchanges, okay, which allow users to trade cryptocurrencies directly from their own non-custodial wallets without the need for an intermediary. Okay, so that is what crypto is, and that's what DEX is. Okay, so understand that. In contrast, decentralized systems distribute control and decision making across a network of participants instead of having it under a single central control. Okay. All right. The degree of decentralization as well can vary among different cryptocurrencies and blockchain projects. Some may be more decentralized than others, depending on factors such as the consensus mechanism used, the number of nodes in the network, and the distribution of control among participants. Okay, so once again, the benefits of decentralization, it's going to go ahead and give power to the consumers, give power to the people, and give power to the users. So instead of everything being controlled by one central, you get to control when you send your payment through. So, if you send a wire transfer, the bank is responsible for when the money is going to be sent through instead of the blockchain and the Rush and says, etc. So the decentralization benefits is going to remove middlemen. It's going to empower individuals through just direct transactions through customer to customer, peer to peer, just like old school trading. So it's pretty much bringing back old school trading instead of having everything go through the bank. Okay. And the blockchain ensures data integrity and builds trust among participants. Once again, it verifies each and every single transaction by just making sure that it was confirmed or not. So whenever you do send some crypto, you can actually check it on a blockchain checker or something like that. Check your transaction ID, and if you have confirmations, then most likely the other party got the funds. Okay. So cryptocurrency's evolution. So early innovation. Okay. DigiCash. Okay. DigiCash, it really pioneered digital currency, but failed to gain traction. Okay, DigiCash was before like a lot of things and stuff like that. And then, Bitcoin started coming out. Okay, so Bitcoin started coming out, started gaining some emergence and popularity. Okay, started just started just growing. A lot of people didn't believe in it at first, you know, and it established decentralized currency, changing the financial landscape. Okay, produced by Satoshi Nakamoto. Um, and yeah, so Bitcoin, it's used by many people who just want to just transfer and send funds without having their funds traced, without having their funds traced for taxes, or you might be in a different country. It's kind of hard to send money to people in a different country without using cryptocurrency. You guys might experience fees or some things like that as well too. Okay. So before Bitcoin, once again, digital cash technologies was released, and that started with David Chaum's eCash in the 1980s. The idea that solutions to computationalized puzzles could have some value was first proposed by cryptographers Cynthia Dork and Monty Noor in 1992. Okay, so Adam Back also developed Hashcash and is a proof work scheme for spam control in 1997. Okay, and the first proposals for distributed digital scarcity based on cryptocurrencies came from cypherpunks We Die, also known as B Money, and Nit Sababa, also known as Big Gold, in 1998. Okay. And in 2004, they developed the first currency based on reasonable proof of work. Okay. The attempts at first were not successful. All right. And then around the 2008, the 2009 area, then Satoshi Nakamoto, you know, um, really just started to release Bitcoin and cultivate it. So Bitcoin came out in January 3rd of 2009, and the Bitcoin network was created when Nakamoto mined the starting block of the chain. Okay. And there's going to be a few major cryptocurrencies that today. We do have Bitcoin, of course, created by Satoshi Nakamoto. Then we do have Ethereum as well. It's a platform for decentralized applications and smart contracts. And then we have, Dogecoins. If you guys have heard of meme coins, you might have seen Dogecoin, PayPayCoin, a couple other meme coins as well. Originally a joke, now a popular meme coin with a large following, meaning that people might think it might have value in the future based off of a joke. Okay. So it's going to be a lot of crypto users today. So it's 300 billion market cap of Bitcoin. Tons of people are in it today. And 40% of people increased their investment portfolio once they started investing. And 1 in 10 crypto users, really just believed in crypto within the very beginning today. Not many people believed in it in the very beginning, and now people are just now trying to get in due to the fact that it's popular. So there's a lot of benefits of cryptocurrency. Let's explore the accessibility and the innovation in the cryptocurrency landscape for a more inclusive financial future. So cryptocurrency offers unmatched accessibility and fosters technological innovation. It empowers individuals worldwide to engage in financial activities previously restricted by traditional banking systems. So once again, you can easily send money to somebody across the country, across the world, just super duper easily, no bank accounts involved. And crypto just allows you to do everything discreetly as well too. There's going to be things like Phantom, and yeah, and you guys can also mine Bitcoin as well too. So mining Bitcoin involves maintaining the blockchain through computer processing power. So miners group and broadcast new transactions into blocks, which are then verified by the network. Each block must contain a proof of work, POW, to be accepted, involving finding a nonce number that, combined with the block content, produces a hash numerically smaller than the network's difficulty target. This POW is simple to verify but hard to generate, requiring many attempts. POW forms the basis of Bitcoin's consensus mechanism. Okay. So also, mining Bitcoin consumes significant power and requires specialized hardware. So don't just think you can just get any computer on the block and just start trying to mine Bitcoin. It's not really who would do that. Miners who successfully create a new block with a valid nonce can collect transaction fees from the included transactions and a fixed reward in Bitcoins. To claim this reward, a special transaction called a Coinbase is included in the block, with the miner as a payee. All Bitcoins in existence have been created through this type of transaction. This reward is halved every 210,000 blocks until Bitcoin 210 minutes have been issued in total. Okay, which is expected to occur around 2140. So Bitcoin is around 21 million, which is expected to hit around 2140. Then it'll be halved, and afterward miners will only earn from transaction fees. And these fees are determined by the transaction size and the amount of data stored, measured in Satoshis per byte. Risk involved. Understand that there is going to be risk involved in cryptocurrency. Before you guys go investing, I want to tell you guys, please make sure you guys have risk management in place. Please make sure you're playing within 1 to 10% of your account, and understanding the volatility and regulatory challenges of investing in cryptocurrency markets today are going to be crucial for new investors. Cryptocurrency markets are known for their extreme volatility. You also have to understand that crypto is 24/7. It's not like stocks where it's from 9:30 a.m. to 4 p.m. Monday through Friday. No, crypto is 24/7, always moving. If you hit take profit or stop loss, you need to be up ready to close. I don't care if it's 3 a.m., 2 a.m., 5 p.m., doesn't matter. You need to be up and ready to close. So if you're going to trade crypto, understand that there can be extreme volatile action, and there's going to be regulatory uncertainties. There's going to be a lot of good news to make it go bullish, especially as of recent. Just be careful you're not buying at all-time highs as well. If you don't understand trading, once again, StackMODE.net for mentorship. And you have to think about speeches, stuff like that. And crypto is just now getting regulated. And investors must navigate these challenges to make informed decisions about their investment. Okay? So you have to keep navigating all of these challenges. Understand that. Keep up with the news. Keep up with what's happening. And this is why I'm dropping these videos, so you can just give you some information on what crypto is. Okay. Wallets, exchanges, and essential tools. To invest in cryptocurrency, you're going to need a secure wallet and a reliable exchange. There's going to be many things that you can use. You can use Coinbase. There's going to be Phantom wallet. There's going to be hardware wallets you can use with USBs, paper wallets, with QR codes, tons of things you guys can use. Okay. Tons of things you guys can use. And wallets are just going to be used to send and receive transactions. Okay. Once again, there's going to be physical wallets such as USB. You guys can use online wallets such as Phantom, Coinbase, Trust Wallet, and paper wallets as well too. Okay. It's going to be a lot of different wallets you can use. Recommend looking into whatever you decide that you want to use. Okay. So Bitcoin, extremely useful, guys. It's evolutionizing the future, and it's creating so much innovation within the worldwide. And the focus on green technology and adoption is transforming the crypto landscape. Okay. So crypto, guys, it's getting used by governments all across the world. People are going to get into trading more and more and more. The world is changing. And if you're not trading, you're going to be behind. Okay. So in 2018, the overwhelming majority of Bitcoin transactions took place. Okay. Understand that companies are investing, governments are investing. El Salvador has 76.5 million worth of Bitcoin in its reserves as of 2023 information. Okay. And it's definitely gone up since then. So we need to structure ourselves, understand what this is, and let's start investing. Stop being scared with our bread. Buy at key areas of support, buy every dip, stay prayed up with God, and keep grinding. Peace.